could be your sanctuary if you're ready tonight. I know that it's all so heavy. Won't you let me inside? 'Cause I could be your sanctuary.
What's up guys, hope everyone is doing well. In today's video, I'm going to be going over some updates for Bitcoin. I'm going to touch on the total market caps for crypto, the entire one and also the one that excludes Bitcoin. Really not much of a difference, but I thought I may as well go over both of them given the way the market seems to be behaving right now. And then I'm going to touch on the New York Stock Exchange, as I have been recently, given that it seems and appears, or at least I personally believe, that the decoupling is in the midst of ensuing. I don't think it's going to happen quickly. It might take like a period of 3-5 years or so for it to really fully set in. But outside of that, at the end of the video, I'm going to go over XYO and THETA. Also, at some point during the video, it's probably going to be rather long, but I'm going to go over the way that I personally view the market in terms of market strategy as well. But to go ahead and get it started, we see here this chart, which I've gone over in my previous video. I'll have cards linked beginning of this video if you're new to my videos and you're interested in my content, want to see more. I also have 2 educational videos at the end of this video, which I probably need to make some updates for those, but anyways, this chart basically is just saying we've been getting on this RSI bullish divergence for the last like 7 months. We see a bullish divergence in each of these bottoms. We go back here to 2019, 2018, say the same thing. And then back here from around January of 2015 to around September of 2015, we also saw a bullish divergence with respect to price as well. Again, you will see here pink vectors being printed once we lose this band into the bottom. Again, right here, 2018, see the same thing right here. And as I've already mentioned in my previous video, we can look at this darker blue vector candle right here so it's a bullish divergence vector candle, just letting us know, as I mentioned, we've seen the 7th month along about bullish divergence. I believe this has really confirmed that. Also, another interesting thing, which this might not be the chart that I have it on. Yeah, it is. Okay, so I don't think it's any coincidence that this bullish divergence candle is what actually broke us out of this pretty much curved falling wedge that I've been using on here for about months at this time. I feel like this is a very good way to actually look at the market. I feel like in general just using curves instead of trend lines is typically going to be more accurate. I mean, even like for example, I mean the universe we live in, everything is curve linear. Nothing actually goes in a straight line, it's all curve linear. But anyways, let's go back to this chart here. We are breaking up just a little bit. Once we eventually close candle outside of this this descending channel right here of this bottom we've been setting for the last 7 months. So once we close the candle here on this 2-week chart out of this box again and then above 20,000, around 20.5 thousand, I believe that will again further signify the bull market. If we go to this 4-day chart right here on this lower time frame, as I did mention previously, we need to break above the next milestone around 20, I mean just in general 25,000. Obviously it's going to be the point that we got rejected at back here in August last year, around 24,000 or so, just around 25,000, which is just what lines up with breaking above this band we see. Again, that's what we needed to do for right here, this relief rally and this double top back here to 69,000. We got support in it, then bounced upwards. We'll see here, this is what after the March crash, we needed to break above the band and reclaim it. So what happened back here for this relief rally of this this phase 2 of this current cycle 3 for Bitcoin that we're in. And then after that, I believe we'll likely come up towards around 25, maybe even see some wicks up to like 28,000 or so, who knows. Maybe sit there for a little bit and then push up towards this 200 estimating moving average. Because I do personally believe that the next bull market, or at least some sort of relief rally, is coming. Again, as I don't fully know what's going to happen, as no one else does, but I would say after 25,000 approximately solidified, and we don't see wicks, which I don't think are too likely, up to 28,000, then we'll move up to around, I think it's actually probably more likely that it'll go to around 30 to 35,000, sit there for a little bit, and then continue to go higher. Again, that factors into, I'll find it eventually, or maybe I won't. I may have not. I may have forgot to Actually, I think it's this chart right here. Nope, it's not. Okay, it's this one. I have so many on here. You can't see how many tabs I have up here, but I have a lot. Again, which I've already touched on this as well. There's two routes. And there's three fractal patterns on here, but two major routes. These are each of the previous bull runs we've seen. The white and the yellow one are within the current cycle that we're in. So from February of 2019 to 64,000, and then the black one is the previous cycle's final phase. So the phase 2 of the cycle 2. So again, like the previous cycle we had from when the bull market began, so around September of 2015 to December of 2017. I don't think that that one is highly likely. I think that either the white one or the yellow one is will be what transpires in the coming about year or so. I mean, if we take this white pattern, and the top will more likely occur on 500,000 or so, like 2025, 2026 or so. But again, the reason why I believe we'll see this yellow pattern towards, in general, range around 20, or not 20, but 200,000 to 300,000, either end of this year, last like 2-3 months of this year, or if things extend, obviously, because I don't fully know what's going to happen, maybe 3 to 4 months into 2024. I'm specifically thinking it'll head to around like approximately 242,000, 43,000. In general, like I said, 200, 300,000, sweet spot of 250,000, give or take like 30,000. But again, I think that that general $100,000 range that I'm speaking about is the sweet spot to be looking at here. Again, as I have mentioned with this analysis with respect to the halvings, this mathematical way of looking at it in terms of a time analysis, each of these white dotted lines you see on here, these vertical ones, represent a halving range, the second line actually being where the halving occurred on this 2-weekly chart. Again, if you take out 72 bars from each of these, you can see this nicely lines up with each current, not current, also our current, which I believe will end up falling through, but each of these previous two bottoms back here going back to 2015, you can see that within 72 bars, bear market occurred, and we reached the bottom and then reversed towards the upside. As I've been saying, and as it says up here in this text box, bull run should begin no later than February 13th, and it looks like we are already beginning that. Again, we have our bullish divergence candle right here. Again, just lining up with the fact we have been seeing for the last 7 months. Bullish divergence right here. Again, back on all of these as well. Also, we're just in general touching. I believe that the RSI will continue to trend downwards over time because it is just what, in general, given this is a relative strength index, and you can look at it as velocity of price basically. As Bitcoin matures over its time period logarithmically, it's just losing its oomph over time. It's losing its strength. That's why the cycles take a longer time, elapse over a longer time. The bear markets last longer, although they're getting less severe, it seems like. And the bull markets are also getting less bullish as well, and they're also lasting longer. Which leads me into, if we do continue to take this yellow path and Bitcoin continues to progress according to how I personally believe it to have been progressing ever since it came out in a logical, fractal-like manner, a very self-similar manner. I know a lot of people think that this way of looking at the market's stupid, but I personally don't think that. I mean, nature itself is fractal-like and very self-similar in its formation, especially when you look at physics and things like that. But we'll continue. We'll enter the cycle, or phase 2 of the current cycle 3 we're on. It'll be a pretty much repetition of 2013, November of 2013 to December of 2017. Again, it will happen over a longer period of time. It won't be as bullish. The percentage gains from bottom to top will be less than the previous one in the prior cycle too. But I believe that'll put us at around the range, probably I'm gonna like 2030, 2031, 2032, around no higher than around 1.6 million, I believe, is then. And a lot of people believe by 2030 a Bitcoin will go to $1 million or run over $1 million. Kathy Wood's been saying that for quite some time. I'm sure, I forgot his name, Michael Saylor. I'm sure he believes that as well. Many people do, but here on this 2-day chart right here again, this was the 4-day chart, by the way, this one I was talking about with respect to breaking above this band around 25,000, then heading towards around 28 to 32, maybe 35,000 or so. But if we look at this 2-day chart, again, I want to point out, so this white moving average is a 200 estimated moving average, and this dark blue one or this purple one however you see it, is the 800 estimating moving average. Again, as I pointed out, this moving average band is very important. We can see that this 800 EMA crossed over right when we got this final dump. Essentially, it lined up just about almost precisely, you could say honestly, with the actual bottom. So hopefully these two moving averages, this band and this 800 EMA, will be a good indicator for future cycles and future bottoms. But again, that's just something we'll have to come to see. So moving up to, again, like I said, 26,000, 25,000 being that sweet spot. Also is lining up with this 200 EMA right here, which is a good thing to see. You can see that's what we entangled with back here when we got rejected for around 48,000. That's what we got the bounce off back here from July 21 to the double top at 69,000. But again, I think we'll continue to head up from here towards around, we need to get to just push 23, 25, 26,000, sit there for a little bit, then break above towards, like I said, probably around 30, 35,000 within that general range. Sit there for a little bit, likely push up to around 42,000, which again, as you can see, does nicely line up with pretty much the sweet spot of this previous consolidation that we set back here. Again, once we got rejected for pretty much the, what we could just say about, no, I'll just count this as one. It's about the third time we got rejected back here within this curved falling wedge that we see here. And so according to this, I believe we'll likely see Bitcoin make that massive parabolic leap around 6 to 7, 8 months into this year. Again, I think we will go towards, in general, 200 to 300,000, sweet spot of around 242,000, 250,000 or so. Before that, again, seeing self-similar behavior. So how we saw this this kind of major retracement that it saw after seeing this massive pump back here from around 43,000 to around 30,000 in the previous bull run of this phase that we're in. I believe that's going to, this time will line up around 150,000 to around 120,000 or so. But if we go to these lower time frames here, if we look at this 4-hour chart, again, this is the same chart as I just went over right here on this 2-day. But you can see this fractal pattern, or this bars pattern that I have here, jumping out nicely, breaking above this 800 EMA as I've been mentioning. Again, 800 EMA, 200 EMA, very important moving averages on all of these charts. Here on these lower time frames, I've been saying it's important we need to see price break above it and continue to move above it. We've been breaking above this moving average band as well, which is also what we need to be seeing here again on these lower time frames. But we've seen Bitcoin have a nice bullish movement towards the upside recently at around 22.7 so far. As you can see here on this lower time frame, we could likely end up making, for example, there's been a lot of people, maybe not necessarily a lot of people, I'm mainly just referring to Crypto. He's been referring to this as a bull flag, an upwards tilted bull flag. We could see it on this lower time frame, again, this being the 4-hour. We've seen this bull flag, which could transition into this higher time frame, and we'll see a longer term upwards tilted bull flag, which will then lead us into around 30 to 35,000. Again, this just factors into the fractal nature of the markets and the self-similarity that I personally believe permeates all markets, which is why a lot of people that are been doing this for quite some time, people that are successful and have been successful in the stock market, just buy certain stocks at certain times of the year across time, and it just, works out perfectly, because I mean, time is obviously a very key aspect of trading. But again, like I said, likely could see this smaller, we're kind of just seeing right here, this on this 4-hour, a longer period upwards tilting bull flag play out. We'll come up to, again, this area right here. Again, we'll kind of, I suppose you could even see, this is almost like a symmetrical, again, if we just get something similar to it, we'll see symmetrical trading right here, and then we'll just continue to break up, and then we'll even again see another almost just kind of nicely symmetrical triangle right here, and then we'll continue to break up towards the upside here, again heading towards these higher higher price targets I've been mentioning. Again, this is just the 2-hour. I'm going to go over the indicators down here. So we have the RSI, stock RSI, and the MACD. We could likely see some, obviously we're slowing down here. The RSI is heavily oversold right now, stock RSI as well. The MACD is already seen retracement similar to how we saw back here. So we could for all intents and purposes, come back down to this ascending channel right here again, which, as I said, could likely just over time transition into our higher time frame upwards tilted bull flag. So as long as we don't lose right now around, I get 20,000 at this point, given that we have seen this bullish movement here recently, I think it's very pivotal that we don't lose 20,000 for Bitcoin. If we go here for this 15-minute chart, just to kind of go down here a little bit lower, again, we could just see some similar sideways trading, as I mentioned here on these lower time frames in my previous videos, just how we did back here. Again, for all we know, I mean, we could just sit here for a little bit and continue to pump even higher. Once more, we may continue to come back down into this channel at some point. But what I do find interesting is that again, price has gone down very little from the local highs. It's set right now around 22.7 thousand. The RSI is already back pretty much at the mid ground around 54. The stock RSI is completely bottomed out, and the MACD has retraced back to 0 and is actually never mind. I was going to say something about some sort of divergence, but it's not there. So I mean, again, like I said, we could trade sideways within this general range. If we come back down and test 21,000, like I said, 20,000, I don't think it's going to be a big deal. We did see a pump here recently, so I mean, always respect some sort of a retracement, but again, we could continue to pump higher here as well. Here for the market cap. So this is the total market cap, the one that includes Bitcoin. Right now, just going to go over a simple analysis here. Just a general trend line based non-curved linear falling wedge or triangle. Right now I'm breaking above again this band, which is right now pretty much lining up with the total crypto market value. Breaking above 1 trillion at this point is the pivotal move that we need to see, which also just does roughly line up with this 200 estimating moving average. Again, we'll probably come up to meet this right here. We'll see this band, we'll see this red and the yellow moving averages down here. So these two and this 200 EMA, we'll see them start to converge on each other as we get to, again, these points right here. We'll likely see all these moving averages converge in this area, and then once things finally want to explode, we will then see the moving averages begin to diverge once more. Again, similar to how we just see things happen back here. You can see how the moving averages tighten up, they converge, eventually they explode and they go their way in which they need to for the given, whether it's a bull run or a bear market. Again, it's almost the same idea here for the crypto market cap excluding Bitcoin. Instead, the pivotal area for this point is around 600 to 700 billion. Here we are again, which is also, and here we broke above this midline, this falling wedge triangle, which is again important to see. Like I said, I personally believe that the bull markets began. We've seen the bullish divergence here on the total market caps as well for the last like 7 months as well. We're seeing similar crossovers here on the MACD. This is the 4-day, so it does look a little bit different than how I mentioned it on the 2-week. Back for Bitcoin on its previous charts. But I mean, the total market cap is just about look like Bitcoin, obviously, because Bitcoin it's the coin that's worth the most. It's the fundamental store of value for cryptocurrency right now, and eventually, I mean, if it does what it's intended to do, will actualize as the fundamental store of value for the entire economy for each country and eventually globally, because unfortunately it tends to be going towards a level of globalization and like World Economic Forum and whatnot that doesn't really seem too fun. I mean, I'm sure maybe a lot of you are probably aware with what Elon Musk has been doing with Twitter and all that, and all the things that have been ousted, but I personally don't fully trust Elon Musk, and to be completely honest with you guys. But here for switching into the stock market now, as I've been mentioning, we're getting here on this 2-day, we finally actualized this bearish divergence right here. As you can see, each time we've come up to this general range, we overextend a little bit here for the New York Stock Exchange, but I believe it's looking similar to this previous M pattern, this turquoise M pattern back here. We'll see something similar right here. We didn't get a bearish divergence on this previous one, but again, looks similar. I believe we'll get eventually just a return back to the basis down here at these lows at around 12,000 or so, which I find interesting. Again, as I mentioned in the previous video, I personally believe that decoupling is going to start beginning over the next few years, and I find it rather ironic and pretty funny that the area that the New York Stock Exchange, I believe, is going to go back down to, so around 12, I mean, down to 11, 10,000 or so, perhaps. I mean, if it wants to really dump. As I said, I believe we're heading into the next 2008 market crash, the next version of it for the stock market, which is obviously not going to be a good thing, but again, going back to this falling curve right here, I mean, that's pretty much, if Bitcoin were to have seen another dump, that's pretty much the price range Bitcoin would have gone to. So again, hopefully you see the irony there. Again, it's kind of, I believe, further confirming the decoupling happening soon. But I just want to go ahead and go to a little bit of a lower, let's go to the 12-hour here. Right now, I mean, it is possible we get support on this upper range right here and continue to go higher. Perhaps the decoupling is not going to ensue as early as I'm personally thinking it to be. But I do, again, like I said, I think we will continue to see downwards movement from here. If the New York Stock Exchange continues to go lower and then breaks through around 14.7, which also just lines up with this 800 EMA, you can see how it's been important. It's what price pretty much entangled around right in this area since about May of last year to our current time. If we lose this 800 EMA again, I believe that will initiate, kind of similar as you can see as it's been currently happening. We will see some movement back to, again, like I said, return to this base. It's kind of like the base average over time for the lows that this New York Stock Exchange has been setting. Here, if we go to the XYO analysis, so the first thing I'm going to go over here is this ABCD, so this triangle pattern. It's rather symmetrical. It's not perfectly symmetrical, but it's symmetrical, more symmetrical than most triangles I've seen recently. And I also actually vividly remember looking on TradingView for XYO analysis at the previous bull market, something that someone posted right before it went berserk during the previous bull market, which was kind of right in this area back here. If you look back here on this XYO to Bitcoin around February of 2021. And this is, we saw a symmetrical triangle right before XYO exploded during the last bull run. Again, mentioning fractal, just bringing that up, self-similarity to your mind. So far it's playing out very nicely. It is good that we're seeing Bitcoin perform well as well, which is just pretty much going to dictate the entire crypto market. The RSI isn't heavily oversold right now. Stock RSI could continue to go upwards and move in this upper range, similar to how we saw back here for this previous leg, which I believe, I mean, essentially I think we're going to see, I'll just go ahead and, I don't even think I have it on here, but I'll just use this chart to go over it. We'll see, and if this continues to play out towards, like I said, the next range that I've been mentioning of around approximately 2 cents, around 2.5 cents, we'll see an ABCD pattern essentially unfold like this. Something like this is what we'll see, I believe. This is also looking rather symmetrical as well. Just nicely lined up these two triangles of this ABCD pattern, looking close enough to the eye at least. So again, that's also nice to see, but doesn't always mean that it's going to go up. Again, we are currently pushing out of this triangle a little bit. I'll go here to a slightly lower time frame. We have broken out of it on the hourly. We're coming down to retest the resistance line. So hopefully we'll continue to come down, or maybe even not continue to come down even lower, and we'll actually hit this and find support. But if we do continue to come into it, don't think it's necessarily too bad. We could actually just continue to trade sideways here. I mean, even though this does look like a very nice triangle, perhaps we just go sideways for a little bit. Who knows, again, what's going to happen. But right now it's just pivotal to not see XYO go below around 0.005854, which is just approximately half a penny right now. We've been getting these yellow vectors, a lot of yellow vectors right here. 1, 2, 3, 4, 5 again, which I said these in the lows, which I would have to go ahead and say these, in general, I'm just going to say, seeing this many printed towards what is looking like the pivotal breakout point of this triangle pattern, I think is a very good thing to be seeing. And I was actually even looking at this on the 15-minute earlier, and I was just kind of looking at how, if I'll find the curve down here eventually, looking at how, that's not it, looking at how much this kind of looks like a cup and handle almost that we saw. As you can see, something like this coming down. We'll test this area right here a little bit and then we'll spring back up. So hopefully something like that will happen. Since I'm already on this 15-minute chart, if we look at the RSI, it is actually seeing right now, I'll just right now a subtle hidden bullish divergence after getting and have been printing a bearish divergence. I've noticed, and if you haven't already noticed, if you start seeing throughout a bull pump, you will see bearish divergences printed, but then if you see hidden bullish divergences, that strengthens the fact that you're seeing bearish divergence, and the hidden bullish divergence is there because it's going to continue going upwards. So hopefully we will see something like that. If we see this 200 estimating moving average here on this 15-minute chart cross above this 800 EMA, we see nice volume support and strength towards the upside. Obviously, I believe that means we will continue to follow through here with this higher time frame analysis that I mentioned on here. Let me go ahead and delete these real quick. But we also, again, on this MACD, saw the Bollinger, or the MACD with Bollinger Bands flip recently. We're just now, not too long into seeing it flip into the green, or the blue, my bad. So hopefully we will see a pump above this towards, like I said, I'll say low ball at around 0.15, so around 1.5 penny to around 2.5 penny for XYO, which again, let's go ahead and zoom out here. Let's go to the daily. Is this what is going to line up with this previous consolidation that we saw outside? And not outside, but back in around January, February, March of 2022. So if you're hearing background noise right now, I apologize. It's somebody walking into my house. But let's go to this hour chart here zoomed in for XYO. We can see how we've come down and relatively tested this 800 EMA each time. So far, I believe we'll continue to get support above it. We are flipping this band right now, which is a good thing to be seeing. Again, just factor that in with the lower time frame analysis I went over on the previous chart. Hopefully we'll continue to see this upwards movement right here. I think breaking above around 0.0075 would be pivotal to see for XYO right now here on this hour chart. That's about all that I wanted to go over for that chart. This is again just a 30-minute, kind of going to a lower time frame. Not really too much to talk about here. Actually, no, I do need to go over that. So I think that this is likely to occur sometime towards the end of this month, going into this range I've been mentioning, around 0.5 penny to 2.5 pennies. Around sometime about last week of this month into like maybe the first week of February, if it plays out how I'm looking, which is what does nicely line up. Again, you can see this range right here. You can see support back here is what we got. So when we lost this 200 EMA right here, and then we got rejected right here pretty much into the sideways action. Again, you can see how this important resistance or support right here, and then we finally apexed on it right here. And then broke down further. Again, this is just nicely lining up with the time range that I just mentioned, like end of this month or so into like early February. Really, personally, it kind of seems like it's more likely to happen more towards the end of this month than around first weekend of February. But again, like I said, like last week of this month, first week of February. This is just a 15-minute, which I already went over that. So here for the XYO to Bitcoin chart, as I've already mentioned, I think it's likely we'll see this Bitcoin move up to, just in general, the vicinity, excuse me for burping just then, but if you even heard it, but we'll move up into this green bubble right here, which is going to line up just in general with the all-time high range set for this XYO to Bitcoin chart. As I already mentioned in my previous video, I believe that's just going to act as a premature indicator to further confirm XYO gaining strength over Bitcoin not only, but also the fact that I think this coin's going to top out earlier than most of the market around June to July of this year, 6 to 7 months, which if you recall is what is going to line up with when Bitcoin's kind of reaching its final apex right here at around 40,000 approximately, give or take like 2,000 before it sees this final parabolic leap into what I believe is most likely to be the next high range of around 200 to 300,000. I think, actually I'm not even going to go over that because I'm not going to do the conversions to Bitcoin right now because I don't feel like doing that. But again, I think this one's around a 33,000, 32,000% move from its current bottom. I believe, again, like I said, I'm going to get general ranges of $2 to $3 for XYO. I believe around, in general, for this second range, I'm going to give $2.30 to $2.50, but specifically, I'm going to say $2.36 to $2.42. Again, like 6 to 7 months into this year, I think we could likely see a double top, and so we'll see a decline from the first top, like I said, 6 to 7 months into this year, and then we'll see movement from around maybe August to September, more towards the end of this year, back up to, again, around $2.50 or so. But here for theta, somebody just commented on my video recently, so I was just going to include this in the next video. But here on this 4-day chart, again, generally, I think the next price target is going to be around $300 to $400, approximately approximately $340, give or take like $20. This is around a 460x, 46,000% from its current bottom. So far, we are nicely seeing an upwards momentum like most of the crypto market is seeing right now. I think, again, self-similar to this fractal pattern, and we could likely see theta it'll see a nice movement early on in this bull run that I believe is coming up to around, maybe wick to as high as around $5, which is the previous support we saw back here, which will then turn into resistance as we make this movement towards the upside. And then we could likely come down to as low as around like $2.50 or so, which is, again, lines up with the support we found back here at this consolidation right below, again, this 200 EMA, and when we got rejected by this moving average band, and also, again, the 200 EMA as well. I think this one's more likely to top out, again, more towards the end of this year, November, December, again, might bleed into like January, February, March of 2024. I'm going to go to the daily here as well. Let's look at the indicators. We are printing here on this daily. We are printing a bearish divergence currently. So we could see some cool down here. Although it is nicely lining up with this fractal pattern right now. It's not obviously perfectly time aligned, but the point is you can see this first movement and then a decrease, which could be kind of what this was right here, and maybe we're kind of beginning, like I said, this kind of second movement towards probably around $1.60, $1.80 first, and then, like I said, to around $2. Yeah, like I said, around $2.50 to around $5 or so, around February, March, April of 2023 before it sees the next movement. But that was about all that I wanted to touch on. I'll go ahead and go over this FANTOM analysis since it's one of the ones I'm watching. But FANTOM has been the best performing coin that I've seen so far, outside of like SHIB doing like a million+%. But I don't take that coin seriously. In all honesty, I don't have anything against it. I just don't take it seriously. But this was a 2000x last bull run, specifically around 222,000%, which I believe it will do again. In all honesty, a lot of people seem to like it. It does seem to have a good program and whatnot going behind it. So if we do see that double top, which for Bitcoin again goes back to 64 to 69,000 coming up, which means we'll hit around like 250,000, maybe we'll come down a little bit and then push back up to maybe like 280,000, or just, again, like, it just depends on wherever this first high is. If the first high is 300,000, maybe the second high, if that even happens, might go to like 310,000, but I personally don't think it's going to push over 300,000. That was just an example. But here on this 4-day chart, the RSI is getting rather oversold, although it doesn't really mean much, as you can see back here during the previous bull run. It's not a bad thing to see the RSI hit the oversold territory, especially in bull runs, because it'll hit the oversold territory and it'll pretty much gradually stay within the oversold territory down to about the midline of around 50 or so. And it'll, obviously you can see bob and weave as I'm going over right here with my cursor in this upper range, and then it'll finally go into the lower range for the bear market, as you can see down here. So I believe we'll just kind of see the RSI function similar. So it's good that we are seeing this breakout right here for the RSI. This MACD is finally starting to see some oomph above converging upon the 0 point. We've been getting this bullish divergence on the MACD since the bull run began. It's finally, I believe, releasing that pressure, especially with how the rest of the market looks with Bitcoin and everything. Stock RSI is pushed to this upper range. Is a good thing to see as well. Again, you can see back here, previous bull run, the stock RSI pushed to this upper range, moved in it until it got the final, not the final, but this kind of, again, it was symmetrical rather. You could look at it as almost a bull flag, almost, honestly. Obviously, it doesn't really look like one, but you can see right here, this consolidation, this triangular-esque consolidation we made. Obviously, it's very ugly. I'm not textbook saying that it is that, but you get what I'm saying there. It looks like a triangle. And then we consolidated, hit a point along this, basically the median point of this fan that I have drawn on here. Then saw the next spike, which I believe will line up with this area right here from around April of this year to around August or so, June, July, August of this year. And then we'll see the next run. And again, as I mentioned with the double top for Bitcoin not too long ago, if we don't see the double top, I'm more inclined to see that Phantom towards the end of this year will hit around $60 to around $90. If we do see the double top and things extend into next year, then it will likely push as high as around this 1.618 at around $400 to $420 or so. This Fibonacci retracement is taken from the absolute bottom on this chart all the way up to the, so it's pretty much, it takes from March of 2020 to the bull run high, so the entire previous bull run. And that lines us up with hitting this 1.618. We've bottomed down on this 0.618. Again, it's just another important thing to see. I don't think at this point we'll come down to meet these lows down here. But that was it for the analysis part of this video. As I mentioned at the beginning of the video, I'm going to go over the way that I look at trading. So the way that I look at it is it's a mixture of dollar cost averaging, DCAing into the market, which is, if I remember correctly, I don't know if it's necessarily proven, don't quote me on that, I'm putting that in air bubbles right now with my hands, to be the best, again in quotations, best and safest way, just because, I mean, I feel like that kind of just factors into the fact of how volatile the cryptocurrency market is. But again, the way that I look at the market is it's a formation of, it's a mixture, like a Venn diagram almost, of dollar cost averaging and also, you know, being a diligent trader and trying to set in good longs as a bull market begins, or you have been watching it throughout the bear market. So for example, as I mentioned in my community post today, if you're familiar with my videos, outside of this, I am a polymath. I've studied physics. I'm writing a book on physics and science in general with respect to a theory of everything and mathematically describing the universe. Just to let you know, the universe looks like an M&M. It's an oblate spheroid. It's how the Earth is shaped. I feel like it's just logically how it should look. It's also, if you know what the cosmic microwave background radiation is, if you look at that, it's shaped like an oval, essentially. If you actually were to analytically carry that out into 3 dimensions, obviously across a dimension, a continuity of time, it's going to look like an M&M. So that's just a fun fact there. So I look at each of these. I'll use this current. So this phase, forgive me, this phase 1 of this current cycle 3 that we're in, of this, again, kind of like this Grim Reaper scythe pattern, moving into this bear market. So you can think about these as almost, these bubbles you see right here as gravitational wells, kind of like just points of lowest pressure mediation, and by that you can think about it as the typical way that gravity is as an idea and as a function of the universe. Correlated people, when you see like just a 2-dimensional sheet, like a trampoline, you put something heavy on this sheet and it obviously is going to create a space, an indent. You can think about like a memory foam mattress, and now you push down on it, that point of pressure is going to be the lowest pressure mediation. That's why water obviously is going downhill. It's heading towards the point of lowest pressure, and by that you can think about each of these bottom bubbles right here. Obviously Bitcoin is going to hit the points of for, just because I'm talking about the market here, I'll say highest pressure mediation, which is going to line up with resistance points, and that also just kind of correlates with, I mean, technically if you think about it, everything in the future is already technically planned out because of the whole idea of eternity, etc. But I mean, these bottoms are already programmed into the price of Bitcoin. Obviously the time just hasn't happened yet. Like for example, like the decisions you're going to make tomorrow, they're already set in stone. I'm not saying you don't have free will. We obviously have free will. In all honesty, it's asinine to say that you don't have free will. I don't think there's any good argument to say that you don't have free will. But again, the way that you're looking at this in terms of a dollar cost averaging is that you can either choose to buy into these points of lowest pressure mediation for the price harmonics over time. Once you buy in these zones, I mean, you could scalp per se, and, you know, buy in this bubble, sell in this bubble, and I mean that is what is going to maximize your profit over time. But at the end of the day, I think it's more safe to kind of just, in my opinion, just buy at the points of lowest pressure. So just put a buy-in right here at around 30,000. Put a buy-in right here again around 30,000. Put a buy-in right here at around 19,000. And then right here, obviously I didn't touch this lowest point within this support curve, but right here at around 15.8 thousand. Again, that is pretty much just what would line up with, I'll get some circles here, kind of just, again, like I said, points of lowest price pressure mediation. So right here, obviously each of these points right here, obviously, you know, price is going to dump right here. Obviously that's not fun, but the idea is that over time you are dollar cost averaging into the best actual places to buy in terms of lows. So what I'm saying is you're buying each and every single low in a dollar cost averaging way across time. Again, the same thing applies here. You buy right here, right here, right here, right here, going into our March crash. And then again, like I said, if you want to be a little bit more risky and try to time the tops as well, you could, I mean, trade this perfectly, you're going to maximize your gains as the best possibility that you can do. But if you just set in nice dollar cost averaging buys in each of these bubbles, you know, as a trader, you progress in time and you get used to how the market goes about and does its thing, then I mean, each of these points, as I said, are going to be the lowest pressure points over time, the best points for price to buy at its lows. And eventually, you know, especially if you put trust in the fact that blockchain is an insanely crazy technology for the advancement of human society. I mean, it's no different than like a thing like the Gutenberg printing press or the advent, the internet, even like the wheel. Just this is one of these technological human inventions. Even the wheel is a form of technology. Yeah, it's not like electronic like we mostly think about it today, but it's technology, human innovation across time that is furthering, you know, our species. I mean, a lot of the things that we come up with nowadays are kind of, you know, not good for ourselves, but you know, some things are good. But I mean, blockchain is going to replace, I mean, everything. It's pretty much a mega rebirth of the internet. For example, the coin XYO that I went over in this video it's a reality oracle. It's helping build the metaverse. I think it's really the main thing that is helping build the metaverse, because this is associated with geospatial data location. It uses an app called Coin, which you can get on your iPhone or whatever phone, I suppose. I assume it's on Android. And as you obviously travel, it's similar to apps like Sweatcoin, and then you're traveling and you hit geomine location hotspots, and you're given, on the Coin app, you're given a coin, and then you can trade coin in for XYO. So that's a good way to essentially get free XYO, if none of you already know about that. But I mean, this coin is so cheap that you may as well just buy it. Again, it's partnered with Microsoft and FedEx, plenty of other things, Chainlink. Again, it's a reality oracle with respect to geolocation services. It's creating a geospatial mesh data framework with respect to our real world location data in terms of a physical sense. It's mapping that into the blockchain. Again, like I said, building the metaverse. For example, you could virtually travel to, if you don't, like if, for example, if you live in the United States and you live in New York, but you want to go to Mount Rushmore, you can, and you don't have the money or whatever, you know, you could go virtual reality, simulate yourself going there, and eventually as time progresses, and if humans even reach the point of being this technologically advanced, I mean, I'd assume we could get to the point to where it's going to look completely realistic. You'll feel things, you'll smell things, but again, like I said, who knows if humanity's not going to wipe itself out before any of that comes. Obviously, I'm sure most of you are aware of how bad the world is right now, and it seems to just continually get worse. Hopefully something will kind of set things back. I believe that will happen, and there will be at least some period of awakening or whatnot in the world for some period of time. But I do generally believe that there's not like much time left in the world. I think at most like 50 years, and I honestly think the world can end as soon as tomorrow, in all honesty. But again, I just want to reiterate my trading strategy in form of, like I said, like a Venn diagram, a mixture of dollar cost averaging, but also being a diligent trader and trying to time your buys in, and you know, just become more knowledgeable and intuitively aware of how the market makes its leaps and bounds, where it's going to bottom out at and where it's going to top out at. But that was essentially all that I wanted to go over in this video. Hopefully you all enjoyed the content. Hopefully you're able to learn and take some things away from this video. Hope you guys enjoyed, and I hope you all have a blessed day.
Ooh, I regret now, won't I see you forever, such a long